Hi everybody, and welcome back to FANG Friday. This is Ross Healy, Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management. Again, thanks for the many people who emailed their concerns and best wishes to me. It's very much appreciated. I can cheerfully tell you that everything is almost back to normal this week. Look, eh? No clunky cast, and my range of motion is coming back nicely. So, a nice shout out to my surgeon, Dr. Laura Tate, at the Michael Garron Hospital here in Toronto. To business. First and foremost, a critical quarter is coming up when we will get to see what the FANGs are actually able to earn and what they will have to say about their outlook going forward. I have to observe that the FANGs, in general, do not look as if they're anticipating anything grand or even interesting, one way or the other. So what does it all mean? Well, with all those earnings and update reports due almost immediately, I think that I should do as the market is doing now, sit in my hands and not try to prejudge what lies ahead for the FANGs. And that probably goes for the overall market as well. Now that Silicon Valley Bank has been dealt with and put to bed, the focus is now squarely on the Fed. But it's quite clear here that Jerome Powell is not about to tip his hand too far. I must say that one thing that intrigues me, and that is the huge shortage of workers, certainly in Canada. It's difficult to forecast a meaningful recession in the face of full and rising employment, although it's not too difficult to foresee that wage pressures may keep the inflation rate higher than our central banks might like. If anyone is looking for falling interest rates to spur on the growth stocks, one may be well advised not to get too far ahead of oneself. Anyway, my job is not to pontificate on such matters, but to see what the FANGs themselves are thinking, as it were. But I have to say that if they are thinking anything like Fed Chairman Powell, they're keeping it close to their vest. Even the major indices are not helping me reach a conclusion. All three of the major North American indices are still short of key resistance breakout points. And so right now, I believe that we still need to exercise caution in our market optimism. Maybe a breakout is coming, or perhaps a near-term top is forming. Hopefully, this crop of quarterly earnings and company updates will clarify some things for us. So, with the admonition that almost nothing that occurred in the past week was, I believe, helpful in looking forward, let's take a look at what truly did occur and what signals, if any, have been given. But before we take a close look at those FANGs and what's been going on, as always, I do like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel, and we appreciate it greatly. We are almost 2,000 subscribers now, so it would be great if you could help us get over that milestone. Anyway, on to the FANGs. Well, we start off with Meta, and we had a lovely buy signal on Meta. It broke out. Actually, it leapt over the super growth price. Didn't even have to break out. It simply leapt there. Has been holding nicely and moving steadily higher. NVIDIA, somewhat surprising, has come up, as you can see, to its HB5, which is 26 times book value, and is now broken out. Now, not terribly decisively, but it's been sort of oozing over that breakpoint. Looking at Netflix, well, Netflix, after our sell signal right at its bubble price, has bounced quite nicely at the mid-super growth price, which is, by the way, 5.5 times book value. It has popped there a couple of times and has been moving higher. Now, of interest to me is the fact that its fair market value has been trending up lately. And that is somewhat surprising, given what the company said at its fourth quarter reporting. So we'll have to wait and see what the first quarter brings. Tesla is, I hardly know what to say about it. It looks as if the stock had been rolling over nicely, broke down, okay, as you can see, and actually rendered a sell signal, which we take as our 2% 5-day rule. Well, it had barely registered when what happened? The stock simply broke out again on the upside. And today it's had a lovely day, I think up some 5%. So a little bit of indecisive trading right here as far as Tesla is concerned. Amazon, after our sell signal at the bubble price, had fallen. I was expecting it to hit its mid-super growth price, which is 5.5 times book, but it has fundamentally just continued to move sideways. Now, you can see, of course, this downwards trend in its intrinsic value, its fair market value. And it's going to be interesting to see whether in this quarter there's any change in that. After all, they have let quite a number of people go, and whether that is going to change the trajectory of earnings and fair market value, we'll have to see. Alphabet simply continues to trade either side of its low super growth price, which is 4.5 times book value. Kind of like it did at its mid-super growth price, traded very, very indecisively either side of that trend, a little more tightly than it has done this time. We've got a bit of wider channel, but the same indecisive trading is still carrying on. And very much the same thing with Microsoft. Okay, again, either side of its HB1, which is 9.5 times its book value. And note, by the way, the flattening out of its earnings forecast and therefore its fair market value. It very much appears as if cloud computing is slowing down, and what the impact of ChatGPT, what that's going to be on Microsoft is not being reflected yet in analysts' forecasts. Finally, we get to Apple, which is kind of my bugbear almost, because we have to keep waiting with every quarter for a new balance sheet to find out what has actually been happening. All of those buybacks had been giving us a nice downtrend, but then they had eased off lately, and those channels has been picking up again. However, I understand that there's been a lot of share buybacks this time around, so we'll have to wait and see. For now, we'll just have to call the stock a hold. Now, to sum up, Meta continues to trade confidently above its super growth price. That's 3.5 times book, and our buy signal remains solidly intact. Mind you, I want to see this latest quarter to make sure that things are on tap for that hope for rebound in that earnings and fair market value trend that you saw on the chart. Second, as I was looking last week, NVIDIA broke out over its HB5. That's 26 times book, and could be heading back to its HB6, or 33 times book, which would be tied for a 23-year all-time high. You should watch closely to see that it can hold right here. But the recent, almost astonishing strength in cryptocurrencies may help to push it there. As far as Netflix is concerned, following that sell at the bubble price in February, the stock fell right to its MSG price, 5.5 times book, and has been enjoying a nice little pop. For the long-term investors in the crowd, I'm not totally optimistic that the setback from the bubble price is over and done, but I wait the first quarter with interest to see how the shares hold up. As I reminded you, you'll recall that the company did suggest caution for the first quarter results in its fourth quarter earnings announcement. 2 weeks ago, we saw that Tesla had a technical breakdown below its HB2 price, or 12 times book. However, virtually the minute that the market finally gave a confirmed sell signal in the stock, it did an about face and has broken back up and out again. Talk about indecisive trading. For now, all we can do is wait and see what this quarter brings. Amazon has rallied a bit, but if history tells us anything, it should continue to slip back to its mid-super growth price, its very long-term low. The question is that miserable earnings fair market value trend for real? In which case, a lot of caution is required here. Or will all those layoffs bring a rebound in its earnings and reinvigorate the stock? Alphabet and Microsoft have continued to dither on either side of their recent breakpoints for some time, what I refer to as indecisive or sloppy trading. While both have broken to the upside, both have been a bit weak lately. And this current quarter may help provide some resolution as to which direction those shares will ultimately take. Finally, we're at the usual point in FANG Friday, closing in on the end of a quarter, where I have to make some sort of informed comment on Apple. As usual, I really want to see their new balance sheet, although I do know that the company has been quite active in buying back stock this time around. Perhaps that guesstimated HB6 price, that's 33 times book, will prove to be support, but there is no rush to make any hard decisions here and now, particularly so close to the end of the quarter. So I will put it down as a hold and wait and see. I have to finish by reminding you that unless or until the S&P is actually able to break out over its super growth price, that's 3.5 times book, which seems unlikely at present, I would treat any exposure to the NASDAQ stocks with considerable caution. The NASDAQ itself has a fair way to go before it could render a buy signal. So I have to repeat that what we are seeing is a rally only, although it's been a pretty big one. To give you lots of notice, I'm scheduled to appear on BNN Market Call on Monday, April the 17th, which is 2 weeks from this coming Monday. So get any questions that you might have in for me in early. Not all questions that are sent in to BNN are actually asked. So let me know if you do send in a question, and I will try to make sure that it does get asked on the program. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and the senior portfolio manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you next week.